Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and the Kaito Yaps market. Loaded up for discussion today. We have a variety of interesting pieces of news. We've got the NASDAQ proposing new rules to allow trading and listing of digital assets based investment interests. We've got Bitcoin rewards app Fold going public yesterday via SPAC merger with a NASDAQ listed company. I've got the Pain token dropping finally, the painful pre-sale, settling at around a $200 million valuation. That was a huge win for the pre-salers. And we've also got Kaito revealing their tokenomics and the drop that has just happened. We were trying to get on top of that whole situation just before the show, understanding what's going on there. We'll talk through that in just a little bit. Two, we've got the latest on price action on crypto and NFTs. Plus, general discussion on the market. As always, stay tuned for that. I'm delighted to say I've got Legendary in the co-host seat with me today. We're ready to get into it. But just a reminder, friends, that nothing that we do, say, think, or feel on this show should be construed as financial advice. This market is very risky. Do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it's Thursday. It's the 20th of February. How you doing? How you feeling?
Ooh, GM. I think we never did that to start the show 10 minutes late. 10 minutes late feels weird to do that, to be in time to get the claim ready. But I'm feeling pretty good. What about yourself?
Yep, same. It's funny, like with the claim airdrops and stuff. Yeah, there's a bit of adrenaline, right? It's kind of an exciting time. And of course, legendary. In fact, I should have taken the bet. I should have taken the bet that you bet me at the start of the before the show. Legendary said, "What's the bet that you can claim before me?" And I would never ever bet on myself in that scenario because it is true. Legendary is the best button clicker in the game, and for God knows what reason. And this is not really down to me, though, is it? Like you were on you were on the site before me. But I don't know. VPN, no VPN. I don't know how these things work sometimes. Mine just sailed right through and yours did not.
Yeah, I couldn't go on the site. You saved me. You basically saved me because I was like so stressing that it doesn't work on a non-VPN connection, because typically like in Austria everything works crypto-wise. And then like quickly jumping on a German VPN allowed me to be able to claim.
Yeah, there we go. As I said, like yesterday, I sold my tokens. I'm going to do a bit of a zero-based budgeting for the business. I'm going to digest the tokenomics fully, consider what we need to do, like to what extent we need these tokens, and if there's useful ways to stake it. If we're going to need it for the business, I'm going to consider buying back, depending on how I evaluate it moving forward. So that's that. We're going to dive into more. I think we'll do a bit of a breakdown of the tokenomics in a bit as well, because I think people will be interested in that. So let's get into it, starting with the main price action. Let's start at the top as usual with the majors. We've got Bitcoin, which is up 1% to 97. That sounds pretty good somehow at the moment. Sentiment is quite bad considering Bitcoin's at 97. You've got ETH, which is flat at 2.7. You've got XRP up 5% today to $2.70. You've got BNB flat at $648, and you've got Solana at 174. That's pretty nice. Bounced off the lows around 160 the other day. You've got on the meme coin side of things, we have Dogecoin at 25, Pepe flat as well, Trump flat. A lot of stuff kind of just sitting in its position at the moment. Bonk is flat. Meow is up 22. Pudgy is up 3%. We've got AI16Z up almost 9%. Fartcoin up almost 9%. Mog is flat. Fraser AI up 27%. I've been hearing that name more recently. I need to figure out what it exactly is, but it's up a lot today at least. AIXBT up 4 as well. Maybe a little bit of bounce across the AI stuff in general. Getting into the main headlines themselves. Let me just find the right set. They are with me in one moment. My computer is being slow. We've got the NASDAQ proposing new rules to allow trading and listing of digital asset-based investment interests. Legendary is going to give a bit of a breakdown, just a short breakdown of what that means in a bit, and I've got some thoughts there. Bitcoin rewards app Fold went public yesterday. I feel like no one talked about this on crypto Twitter. I think that's happening a lot actually at the moment. No one's talking about like these very significant corporate movements because everyone's so stuck in the trenches and trading. I don't know if it's correct that Kanye coin has just got launched, or that's like unverified. Someone messaged us that like a second ago before the show. Haven't verified that something is live. I don't know if that's correct or not. Maybe we'll do a bit of live research there in a moment. So yeah, people are ignoring like public companies going live that are Bitcoin focused because their heads in the trenches. Payne dropped and settles at around $200 million. That was a big W for the pre-salers. Got stats with us today, so maybe he can take us through that a little bit later in the show. That'd be great. And then, as we said, Kaito has just gone live. Legendary, do you know the market cap or FTV of that as it's gone out at the moment? Do we know that?
It's actually going up. It's at 1.2 bill right now.
Oh, okay. 1.2 bill for Kaito. Not bad at all. Well, very, very good, in fact. But we'll dive into the tokenomics. I think people will be interested in that. But on the NFT side, Legendary, what are you thinking there?
Yeah, absolutely. Let's take a look. Bored Apes are up 4.5%, 13.7 ETH floor. Pudgy Penguins are flat, 8.7 ETH floor. Miladys, however, they are down 6%, 3.73 ETH floor for the Miladys collection. Doodles, they are up 3.83 ETH, up 3.5%. Azuki's down another 1.3%, 2.78 ETH floor. And just because we'll talk about it either way, the Kaito Genesis NFTs, after having recovered initially post the snapshot and having actually went back as high as 5.5 ETH, they are now down 41%, 2.88 ETH floor for that collection.
Love it. As you said, we're going to go straight into the Kaito stuff in just a minute, just to get people up to speed with everything else that's been happening in the space. World Liberty Fi bought $125,000 worth of SAY tokens yesterday. X announced Grok 3 and shared, it's pretty ludicrous. In the promo video, there was a Pump Fun link, Pump Fun token in the comments. And then that ran up to like $10 million at one point in time. Universal announced a $9 million round led by A16Z to help trade assets across chains. I'm seeing this a lot now, a lot of protocols, a lot of products coming to market where they want to abstract away all the bridging and just let you hold the asset that you want, no matter what chain it is, within their product in some way. So that's interesting to see. Fancy Top announced its move to Monad with a free-to-play testnet game. I suspect if you want to do something on Monad and don't know what to do, being familiar with that is such an easy way to get exposure to Monad. I'm probably going to do that. I don't know what else is going on Monad, but I'm familiar with Fancy Top. I think they've done a great job on the social gaming side. So that's, I think, a really good thing to get involved in. Story Protocol and Bear Chain big rises, up 25% and 16% respectively yesterday. So that is positive price action there. And Brian Armstrong commented on meme coins. They said we've clearly gone too far lately and thinks people will see some prison time. Legendary, just a quick one today. Any reflections on that, or should we just go straight into the Kaito stuff, because we obviously started a little bit late today?
Yeah, let's maybe skip the reflections on the roundup and get into the Kaito stuff.
Let's do it.
All right. So what has happened is the airdrop did go live. We only got the tokenomics a couple of hours before the airdrop. There's been quite a few details about that. I think the key takeaway is that 10% was airdropped to yappers, to external communities, to people who have been subscribing to Kaito Pro, as well as to NFT holders. And the big thing is, I'm not going to go through all the criteria because, as you said, we're a bit late either way, is that there's been way more than just the yaps. And the differences are astonishing because your on-chain reputation matters. The alignment with the Kaito values matters. So having posted probably that you're going to FSH your airdrop didn't play out that well. I don't know, just to put that in reference with some of the other claims, I don't know if CBB is trolling us or not with his post, but CBB had shared that he got 4,400 Kaito for 2,500 yaps, and Whale in the comments shared, it's public, so I can share that here as well, that he got 130,000 tokens with 7.8k yaps, so roughly 3.5 times the yaps, but 30 times the tokens. So I don't know if CBB is trolling or not, but from the numbers that I've seen and I heard so far, and I've seen friends sending me, there seems to be a massive, massive difference. And those weighting criteria did play a significant role. So it was not just the apps alone.
Okay, so I'm going to go through, appreciate that short summary, Legendary. I'll dive in a bit more. I had a post earlier today kind of trying to dive into like where the differences might come about. And there's a few factors. And for lots of people, it might be different. So these were the factors. This was my post earlier. This is why I said I think yaps are going to be worth less than what the initial thoughts were because of the tokenomics. In the end, only 10% was allocated to this initial claim. So already that's one reason why it's less, because that is less than what people thought. But then beyond that, within that 10% is not all just going to yappers. It's distributed within that 10% to various different groups. So the first group, okay, is yappers. But it's also taking into account, as you said, Kaito value alignment, Kaito long-term loyalty, overall Kaito ecosystem participation, governance participation. Remember, there's been votes going on Kaito the last few weeks where you've been able to press vote on these various protocols who are looking to get their protocols on the what do we call them? The mindshare boards. So, participating in that's helpful. They also mentioned even things like regional yappers, emerging yappers, on-chain reputation. So depending on what wallet you get and what kind of activity is there, maybe a fresh wallet would have no on-chain reputation, whereas an active wallet doing various stuff might have received something better. The regional and emerging one was interesting. One that they're even thinking in terms of regions, like, okay, maybe this person is more influential in this region, and maybe we want to have a certain amount allocated to that region. And then emerging yappers, remember there's that different board for emerging yappers, people who maybe have slightly smaller accounts and wanting to kind of include them. But then it was much more than that. Kaito Pro users, so those are the people who are actual subscribers and paying customers, they get a slice from this 10%. Ecosystem partners are also getting a slice from this 10%. And that means people, and this is the people who they specifically mentioned in the documents, although I'm sure there are other people. They mentioned Berachain, Mega ETH, Story Protocol, Anime, Corn, for example. And then they're going to work with teams to make sure those get out to the end user. So I don't know, my guess in that scenario would be if you are high up on those protocols, mindshare boards, maybe some of this Kaito ends back, kind of works its way back to you, because I'm pretty sure the protocols themselves don't need it, do they? Although I don't know about that. That's me thinking it through. And then even more so within this 10%, you've got the Genesis NFT holders who also get a slice from this allocation. So I'm sure there was some kind of bonus on top of that. Some further thoughts that I kind of picked out in this post was there's another 7.5% allocated to long-term creator incentives. I think that probably makes sense to be for people who are tweeting and continuing to participate in that way, because that's specifically for long-term creator incentives. You got 32.2%. I thought this was on the high side, but maybe it's good. 32.2% for ecosystem and network growth for grants, marketing, incentives, and other initiatives to drive adoption. I think that's a pretty significant chunk for collaboration personally. And then you've got this other large chunk, which I've kind of put together, although they tried to separate it out. You've got the foundation with 10%. You've got core contributors for 25%. You've got the early backers at 8.3%. I think all of these are amounts, and so in total, that's 43.3%. Team, contributors, early backers, and that stuff is probably locked up for a bit and is going to start vesting over time. As you can see, we're showing on screen the token unlock schedule. Only really starts unlocking. We've got about 20-something% circulating at the moment. More will start unlocking in August this year, but on a very kind of slow tiered basis. And then the bigger unlocks start from February 2026 and start to kind of ramp up from there. Or in fact, maybe August 2020. Yeah, August 2026, I think. Hang on, let me zoom in on this image. I can't see. Legendary, can you see what I'm talking about?
Yeah, let me get it up and correct it in it or find out.
No, it's fine. So that's right. That's right. What I said. Like it kind of ramps up a little bit in February 26 and then ramps up more in August 26, and vests over the rest of that year. Okay, that's that. any further reflections, Legendary, on the protocol? A lot of people were asking me in my comments to this post, like, are you disappointed? Are you like, how do you feel about it? This is my general perspective when it comes to airdrops, and then I'll pass over to you. We've also got Whale on stage. Would be curious to hear his thoughts. I'll go to him after Legendary. My general perspective with airdrops is I take what I'm given. Like, I don't over leverage myself. I'm not I'm busy. I have other stuff to do. I think, could they have done more? Sure, they could have. But in general, I think it's positive EV for me as an individual in my position to participate, take what's on the table, and then evaluate it after. I have no expectations, and I think that's the thing that gets people. Like, how can I be disappointed? Well, I would only be disappointed if I had really crazy expectations, or if I had over leveraged myself, or if I had stopped running my business in order to completely focus on Kaito Yaps, which I did not do. So I think that's the best way to approach it in general. What's your thoughts, Legendary? Then would love to go. Whale's just dropped down. I don't know if Whale, if you want to come back to give your thoughts on it as well. I know you're a big Yap recipient. Would love to hear from you as well, Legendary.
Yeah, very much agree. We're very, very happy with the airdrop. I've just seen that Alex Svanovic from Nansen has posted a dashboard with the top sellers, the top dumpers of Kaito. I can see some very familiar names on top of that. ICO Beast, Dees, Tyler, myself. That's pretty fun to see. I'm happy with the airdrop. Look, as you said, ultimately I didn't change a lot about my posting, and I got a nice airdrop for that. So there's nothing to really complain about.
Yeah, I think that's fair. Would love to throw to Whale, who's with us as well. Whale, how are you feeling? How are you doing? How are you thinking through the airdrop details, the tokenomics, and anything else related to Kaito at the moment?
Yeah, for sure. So Legendary and I had a call earlier, and we can discuss this too. I think for the people who were on top of the leaderboard, it would have been more bullish if it was just like linear yaps, like airdrop based on yaps. I think right now it's not so much a problem of the calculation, like you mentioned, like the allocation that I received, which I think is bigger than other people received in relation to their yaps. I think it's more of a percentage allocation issue at this point, not really like how they distributed it. So I'm happy to, like, it's still a cool airdrop, but I think you mentioned like expectations versus reality. In my mind, I already was at my new beach house in Malibu, and now I'm here with at best a decent a decent small house here, not even maybe a small apartment here in Germany. So I think expectation versus reality got a lot of people, but yeah, it's still a good airdrop. So I'm not complaining, but it's funny that comparing the expectations versus reality for most airdrops, sometimes that's how it is. But yeah, I'm not sad. I'm just a little bit disappointed with the amount of allocation that I not about the token, how the token performed. I think at 1 billion, that's good. More about the number of tokens that I received. I expected more based on percentage allocations and stuff that people talked about in the last few days.
Okay. I think that's fair enough. As you said, well, the beach house in Malibu, I guess, was a very tempting perspective, and I think a lot of people started thinking that way. But look, I think it's I think managing expectations in the space is always one of the things that is incredibly difficult to do. So that's always something that we've got to do. I think the product is still there's a lot of people fudding the product, even maybe in the post that I was doing before, kind of comparing it to NFT Inspect or asking questions about the product. Look, I think this is the best example of InfoFi or SocialFi, InfoFi, however you want to, however you want to cut it. It's the best example of people providing information that both teams really, really want and marketers really, really want. I've spoken to both sets of those people, and both seem to be really, really finding the product very, very useful to them. So also got Pix on stage with us today. Pix, you are a prolific creator too. Maybe one final reflection from you before we keep it moving and getting into the main news today.
You know, all I'm gonna say is the steam I got from Kaito for basically 2 months of posting pretty much the same content is about 5 times more than everything I got from X in over a year. So I'm happy with it, you know. I'll take it.
Interesting. Yeah, I was thinking about that to some extent. Like X is doing a pretty cool thing as well, by the way, right? On the creator side, I think a lot of people are doing quite well there. So yeah, but this is obviously the more lucrative one as things stand, particularly because it's not only coming directly from Kaito. You have all these other integrations with the partners who are leveraging the information. So I think that is super interesting. Just wanted to welcome to the stage Andy from the Rollup. Welcome to the stage, Andy. Good to see you with us. I believe it's your first time with us. I'm guessing you're joining to participate in the Kaito debate. We're just closing that section off of the show, but would love to hear your thoughts.
Yeah. I just wanted to see how much Wale got in Kaito. I haven't checked. I'm out at an event, and we were going back and forth in DMs, wondering which reasonably sized house we were going to buy. But it seems like we're going to be buying a car now. But I think it's kind of bullish. Wale, what'd you get? Did you share already, or is it private? Or
this is the worst of my life. I'm claiming Kaito out of that's below expectation, and I'm getting called Wale on Spaces. I hate it. No, I'm kidding. Andy, okay. I got.
It's very German of you.
Yeah, I got 130, about 130K. I think 120 something tokens.
Nice.
Mooncat had a great post, legendary Bijak, maybe we can pin it, where he kind of compared the allocation. So I think my rate was 16.5 YEPs versus tokens.
Yeah.
For I think Adam it was 19, and for CBB it was like 4. So I don't know what they used to calculate that, but it seems that fluctuates like between 4 and I don't know 20 Kaito tokens per YEP. Or the other way around.
Yeah.
No.
Okay.
So different rates for different people.
Yeah. No, I think I'm on Kaito's good side, so I think it should be okay. But people overinflated the expectations here by a lot. But
yeah,
fucking,
what's your reflection there, Andy? Like, obviously, for people who don't know, you run the Rollup, one of the most prominent crypto media entities at the moment. You've obviously been a huge yapper, huge beneficiary. I think you were always up in the top leaderboards. What's your general reflection on the rollout of the airdrop, but also maybe just a reflection on the product?
Yeah, I mean, I think I will probably not sell very much. I probably stake a lot, maybe sell a little bit just to have some fun money, just to say I did. And I think the product's good. Been working with the team pretty closely for like 6 months. They helped me a lot, kind of like just use their product in the early days. So had that loyalty, and I use the product with our clients. When it comes to their mind share, their positioning, their competitive landscape kind of work that we do with them. So overall, I mean, what a world to exist in, where we get to talk on Twitter and be rewarded. I just want to provide one more existential take, and then I'm going to bounce. We're having a little event here in Hong Kong. But a really, really good conference here. Very bullish amongst all the sentiment in crypto Twitter. But I had a podcast today with Amanda, the CEO of Serotonin, co-founder, and she talked about this idea of the API line, where in the future and even in the present, there are people who are programming the API to give data to the world, and there's those who consume the data. And we talked about how Kaito, with its YAP mechanism in terms of incentivizing good content, doesn't necessarily cause a dilemma of interests and of the type of content that you want to create. But when they start to incentivize you to talk about certain projects, it causes a bit of a social coordination issue, where you're basically not being yourself, and you're talking about things that you're not actually interested in. And so I'm just very curious as to how this plays out from like a social experimentation perspective, because Twitter and encourages you to be polarizing, encourages you to have hot takes, spicy takes, contrarian views. Oftentimes, pessimism is what is rewarded because it pisses people off, frankly. And so Kaito is kind of a mechanism to recognize that mind share. But when it comes to like incentivizing what you should talk about in order to get rewards, you start to wonder like, what side of free will are you on? Like, are you talking about things because you actually care and you have something to add and you have value to add? Or are you talking about things because there's some incentive to be had and because there's some upside potential? And so, yeah, my last thing is her tweet was, everyone's yapping, but is anyone actually saying anything? And I'll just kind of leave you guys with that, where, all of us love the instant gratification of Twitter and of kind of living in this matrix that we call crypto Twitter. But yeah, there's a certain reputational way of doing things and a certain way of like making sure that we have the right incentive structures. And it's been a good experiment, but that is the bear case for Kaito shared with me today from somebody who's not participated.
Yeah, that's
But yeah,
that's super interesting, man. One of the things that we were joking around before is like, you know how it's kind of become completely a normal, or should be standard practice at least, if you are receiving payment for content, you know, to disclose it. Could there be a world in the future where you have to disclose your yap farming because you know that ultimately you're chasing, for example, the incentivized reward delivered by Polkadot at the moment? For like, I think they've got a $10,000, was it $100,000? I just need to double check. There's a huge pool there available for yappers, and then, you know, beyond that, there are people who might not have pools, but you know, there's a token coming, and that's part of the thing. So, could we need to disclose that upfront? I don't think it'll ever be that way, but it's an interesting thought experiment. So, appreciate the additional thoughts, man, and enjoy the rest of your event. Right. We got to keep it moving. I'm pretty sure the yapping and the social stuff could keep us going for a long time, but we've got a bunch of other headlines to get into, which are also super interesting today. We've only got 20 minutes left. Just before we get into the headlines, we've got our sponsored read to get through. We want to shout out our sponsor, Somnia, today. We're diving into Somnia, which is a new EVM layer 1 blockchain that is seriously fast, and it's launching its testnet today. This is what you can expect from the testnet: 1 million transactions per second, sub-second finality, and sub-second latency. This is much more than Ethereum, which hits 15 TPS, Polygon, which hits 10K TPS, and Avalanche, which hits 4.5K TPS. Somnia also just announced $270 million ecosystem funding, supported by the likes of Improbable and M Squared and their investors like A16Z, SoftBank, and Mirana. This $270 million will drive the system forward in 3 ways: accelerated development, expanded grant and accelerated programs, and stronger infrastructure and adoption. So now that testnet is live, this investment is one step closer to accelerating the creation of real-world on-chain applications to scale to millions of users, which you can read about more in the blog in the comments below the spaces if you are further interested. So shout out to Somnia for sponsoring us today and for the rest of the month. We'll keep giving you that information as we have it once a week. Let's get into the rest of the headlines today, Legendary. Starting off with this interesting one about NASDAQ new rule changes. What's the download here? What do we need to know?
Yeah, absolutely. Let's take a look. I'm sharing it on screen. It's an article from the blog that explains what's going on. So basically, there's a proposal that suggests that the stock exchange adds a new rule, which would be called the rule 5712, which would then permit listing and trading of digital asset-based investment interests denoted as securities issued by an entity holding digital assets, as well as commodity-based investment interests derived from cash, derivative securities, products, or other sources. It does sound a bit complicated, and the article goes on to explain what's actually going on, what it would imply, and how that would work out. So let me just try to summarize all of that in more plain English. First of all, if this gets approved, it would make it easier for traditional investors to gain exposure to digital assets through this regulated investment vehicles, ETFs that would also fall under that rule. That then again could also help drive institutional capital who would access that via the NASDAQ. That includes crypto ETFs, tokenized securities, other regulated derivatives that could then be basically structured financial products, which could be listed and traded. Obviously, then also have more access to potential investors, more access to liquidity. The interesting follow-up thought on that is if the SEC approves that, that could set a precedent for other exchanges as well who might want to follow in their footsteps, because obviously, if you have a highly regulated trading place like the NASDAQ, who would implement that, that would make it more attractive, or it would make it easier to pave the way for, say, the New York Stock Exchange or others to follow in their path.
Okay, excellent download there. Thanks for that, Legendary. Maybe one question for stats. If you're with us, Sam, I know you're a big fan of like the alternative way to access crypto. I think the ETFs has obviously opened up a lot of avenues for digital assets, or to access traditional capital. What are you thinking with respect to these other alternatives? And also, I'm actually thinking the other way around, like when crypto capital can access on-chain securities, like, do you think that's bullish for crypto itself, or bullish for the assets, the off-chain assets themselves? How do you think about that?
Man, so like I just don't have enough knowledge of the situation. I.e., like what are the regulatory hurdles? Yeah, is Apple going to pay dividends via crypto? Like, how's that all going to work? There's just so many unknowns. I think like concentrated liquidity can be quite hard to move. So will it be as cheap? I mean, trading right now on Vanguard, on Schwab, on Fidelity, if you wanted to trade $100,000 of Apple stock, it would cost you 6 cents. Like, it's basically free, and it's super liquid. So I mean, like, what does it do to bring it on chain? I guess it gives you access to people who are in different countries. I'm not sure. Like, I think that there are regulations around that people would want to avoid. It would give you access to people who perhaps for tax reasons don't want to move money off chain. But again, I'm not sure if that's the target. So I don't know. Like, I don't know exactly. Like, it feels like a solution in need of a problem, given just how like flawless it is to trade stocks actually on the market, other than opening up to buyers who, like, for regulatory reasons, aren't allowed onto those platforms. So I don't know. I don't have huge thoughts here, but those are just kind of riffing a little bit.
Yeah, fair enough. I think that's definitely the main benefit, opening it up to people for whom the traditional method, and for the people who are traditionally comfortable in that method, is maybe not the case for them for whatever reason, whether that's geographically or yeah, for another reason. But I think either way, you have to go through the full KYC process for that type of stuff. So that would have to be required in any event.
And I think that's the issue there, right? Like, I mean, basically, it feels like a way to get around KYC. You know, given it's crime season, maybe that's a good thing, or being less pejorative, given like, you know, given that it feels like there's a bit of a movement to lower those barriers. But you know, is stock trading going to move fully to fully anonymous? It's like that feels like a bit of a leap, even for the moment.
Yeah, fair enough. Want to come back to you in a bit, Sam, to talk about the pain pre-sale. Just want to hit another headline on the head first, maybe sticking to the more corporate stuff for a second. I thought this piece of news was really cool. This was the news that Bitcoin rewards app Fold debuted on Wall Street. The firm, which holds 1,000 Bitcoin, went public on the NASDAQ Wednesday via a SPAC merger. These are the kind of core bits of information you need to know. Then I'll explain about the product. Fold is now the latest public firm with Bitcoin on its balance sheet, holding 1,000 Bitcoin worth 96 million. FLD shares rallied 30% in early action before giving back a sizable portion of those gains. We know what that feels like. And the interesting thing about the product, I mean, maybe this is something that exists in different forms with different companies at the moment. But I watched this kind of short video explainer from the founder yesterday. And it's basically, they're going to give you, they're going to be launching a credit card, and instead of getting air miles or cash back in return, you're going to get Bitcoin, which is pretty good. And when they specifically asked which is the great question to ask in crypto always, like, where's the money coming from? Where is the money coming from? And they just said it's coming from the same place where the other rewards come from. It's in the interchange fee. And then they've also got all of these other businesses that they're going to be spinning out. They're going to have lending. They're going to have, I think they already have a debit card. They're going to have a credit card. And now it's publicly traded. So I think this Bitcoin lending area of business is going to be really big moving forward. And I guess what they're trying to do is integrate Bitcoin more easily into people's savings and into people's money, so that should you wish to have some Bitcoin as part of that, you can get access to that faster. I think that's super interesting. Legendary. A quick reflection from you before we just keep it moving.
Yeah, I agree with you. I barely seen this news on the timeline. I think it's also significant because now Fold is a publicly traded company that holds 1,000 BTC on their balance sheet, which is also pretty cool to see. In principle, I like the idea of having like that cash back coming to you in BTC. As you said, it's like ultimately a conversion happening in the background, and it's not like appearing from some magical place, which is also honestly the way that it should be, right? I don't want to have any weird explanation as to where the BTC yield or the BTC cashback is coming from. Ultimately, I think we've seen a lot of interesting credit card products. We've also seen, talking about the next piece of news, we've seen Memeland having their own product. We've seen, what is it, Moonwell Finance, where you can basically farm lending yield on stables, on other stuff, and I think then have a Visa credit card that allows you to spend the yield that you farm. So this concept is getting pretty interesting, and also just how popular crypto credit cards are in general, and how the popularity is increasing. And whenever you see someone who's never used one before and then gets one, they're really happy about finding a way to like off-ramp quickly. It's quite I don't know, fascinating from that perspective that crypto initially had the thought to bank the unbanked, and now we have the unbanked degens who can't really get banked because banks don't necessarily want to have like high net worth individuals with money in crypto. It's hard to onboard them from an AML perspective, and now they find those crypto credit cards as a way to convert crypto to fiat and then somehow get banked as well. So we've basically gone full circle with that.
Teasing them in with a little Bitcoin. It's like,
yeah,
if you KYC, we'll just give you a little bit of Bitcoin. Yeah, I think that is part of it. And in the end, people will want to spend the crypto in the real world. As much as it is nice to have JPEGs and meme coins and all the other stuff, like people do want to be able to access it in a better way. So that's interesting stuff. And as you said, I think that there's two things happening on crypto Twitter at the moment. One, all of the crime season is like, I was going to say infecting, maybe that's the wrong word, but it's captured so much of people's attention and is dragging people down in a way. And I just thought this was like a really cool piece of news that I felt like no one was really on top of. So happy to bring that to people's attention. And yeah, let's keep it moving. Stats, wanted to come straight to you here. Legendary mentioned like the meme pay stuff. Maybe you could speak about that a touch, since we are going in, we've kind of just been in that direction. But also you obviously had the pre-sale yesterday that came to market. The Pain token has kind of settled around a $200 million FDV. How are you feeling about the pre-sale? How do you think it went? I saw some really interesting posts that you had on dealing with snipers, given that that's been such a big topic of conversation in the last week or so. What are your thoughts? What are your reflections?
Man, I mean, I have a lot of different thoughts. It's hard to, I guess, summarize it all or figure out where to start on it. Look, I think the team did, the team advised Harold on it. I was not one of the core advisors, but I did dial into some of the calls just to kind of learn more about this process, and that was what drove a lot of my messaging. I mean, I think a lot of my tweets. I mean, I think it went well. It was great. I think the team took no money out of it. We got, I don't know, how much did they get? Like something like $40 million in pre-sale, returned 80% of it. The other 20% went fully into the LP. So there was a lot of money there to kind of defend the price of the token, but it wasn't even necessary because there was a fair bit of demand right out the gate. It was interesting on the the reason I posted about the snipers is because there were tweets that got like thousands of likes talking about how it was like a pump and dump, and how some people even insinuating the team like sniped our own token and then sold, which just couldn't be further from the truth. Like the team literally took nothing out of this deal and just wanted it to be a win. I think we're pretty deep in the NFT ecosystem and then the meme coin ecosystem. So everyone was like aware of the moment we were in and how 100% important it was that like everything be as clean and extractive as possible. And it's nice to see that it went that way. I thought it was fucking hilarious. Like this idea that Harold would get half the supply, and I wanted to keep it at half the supply for I told him, I was like, keep it that way for 30 minutes before you announce that he locked it for 20 years. But the idea of Harold locking his supply until his 100th birthday, I thought was hilarious. And they kind of did it right away. But I think that would have been kind of hilarious if people flooded us and then he put out a video of how he mistakenly locked it for 100 years or for 20 more years. But I don't know. I can answer questions, but overall, I thought they did a pretty impressive job with it. I mean, especially given meme coins are where they are, and
yeah, I think that's completely fair. I've definitely got. I think people are super curious about snipers at the moment, and the team were I guess it's part of a team strategy to figure out to what extent they need to defend against it, right? So I'm just looking at this post that you gave, and I'm just going to read it out for the people who are listening, and then just hearing your thoughts in how you kind of combated that, or the extent to which you even thought that you had to try and fight them in some way. Be really curious. So you shared this observation yesterday on snipers, where you said snipers were able to buy supply before the full LP was finished, setting up on Meteora. The snipers spent $40,000 in fees fighting for the first block access. This led to the chart going ballistic for the first 10 minutes. It was hard to avoid despite working with the best in the business at launches. The snipers ended up having market orders that went out of control, sending the chart to 2 billion. This was before anyone even received the airdrop. The two casualties of it were the snipers who overpaid and lost a ton, buying from other snipers who were better, and B, the chart attached. So basically what happened is that the chart looks worse off as a consequence because the snipers kind of sent it so high so fast because they were sniping against each other. And what that meant is that there was an inevitable sell-off, and so now you're kind of much lower than that initial high. So it just looks like it's gone up and gone down. So any further reflection, Sam? I think people are super curious on the strategy there, the thinking, because sniping has been very, very big and topical in the last week.
So here's my understanding, and I'm just been learning about this over the past week, and I think what we are seeing is I don't want to say this because I think there's a lot of insider pumping and dumping, but I mean certainly not with this token yesterday, but I think it does happen. But a lot of times snipers get all this early token, they get huge, they buy a ton, and then an hour later they dump everything, and the story basically gets ruined because it looks like a pump and dump. People accuse insiders, and it just ends up being terrible. So it's been a big problem. Trying to put it in as simple English as possible, I think basically what happens is the minute that snipers or these bots realize what contract is this highly hyped token, and Pain was one of them, the minute they figure out what the contract address is, they go in and they try to buy whatever tokens listed. What happened yesterday is Pain moved some SOL over, or we posted the contract, or we moved, we were building the LP, and in doing so, we started putting in some of the buckets for where we would buy at different prices. The minute that happened, the snipers bought everything. The problem was we didn't really put that much liquidity on chain. So they bought everything, but then there was no more coin left to buy because the airdrop hadn't, this is literally the millisecond anyone realizes what the actual contract is. So some of them had these multi-million-dollar orders, but there was no coin. There was nothing to buy. So, the only people they could buy from were other snipers who had already bought because we didn't put our liquidity in yet, and no one got the airdrop. So there was nothing there. So the couple snipers who had supply, basically one was like, holy shit, they're still buying. I'll list it at 2 billion. And then the guy went and bought $1 million worth because he had a bad sniper or whatever. But that's basically what happens is like in this decentralized world, on a centralized world, you can control it much better. But in decentralized, the minute the world realizes what the CA is, like you have to have everything set up instantly, as in milliseconds on that first block, or havoc breaks loose. And that happens on every single Solana launch. So that's the basic story of what actually happens.
Man, that's fascinating. It's definitely not one of the things. I mean, I feel like everyone is like doing their homework now and trying to read up on it. And I appreciate that's something you probably just
things you can do. Like, what could you do? You could like put zero liquidity in, like, let's say our token, for example, this one, kind of rumblings or the pre-market was at 200 million. So we could have put all the liquidity at 5 billion and like completely screwed the snipers. The problem though is that then you get this terrible chart that starts at 5 billion and goes straight downward. So no one really wants that. What people want is a chart where like the liquidity moves higher. So you kind of build the, people got in at 32 million. So we were like, okay, like let's start it around 40, where it's up. And then if people want it, they'll build it higher, and push it higher. And that's kind of the chart you want. But the snipers are the ones who, like, they know that that's the general strategy. So they go in and they take all the coin as early as possible. But like I said, and I was on this call, like we worked with like a market making expert who kind of does this for all the big launches. And he was like, holy shit, what just happened? Like no one wanted this. Like no one wanted snipers to be trading at 2 billion. That doesn't like look good for anybody. But at the end of the day, it actually, maybe it kind of prevented like too much sniper activity.
Man, that's fascinating. The
other thing, I just want to throw one other thing. Sorry. The other thing that I think is hilarious is that people are like, oh, you like sniped your own token. You went and bought it. Like the team, like Harold, like didn't even post his tokenomics for the first hour and a half. So like if the team wanted token, they could have just given themselves more token. People don't even pay attention to any of that shit. No one pays attention to anything. So like this idea that if you want more token, you have to go, pay tons of gas fees and or pay tons of bribe fees and get your own, and then you're going to dump it and you're going to do it all on chain. It's like people aren't even thinking about what they're saying. They're just like finding reasons to yell at people. The idea like no one even knows what tokenomics for Libra is. So it's just like if they wanted to give themselves more token, they could have just done it and then dumped it. Like people, I don't know if this point makes any sense, but there really is like an industry of bots out there that are the ones like kind of wreaking this havoc.
Yeah, this is super interesting. I guess the technicalities and the details and the strategies being run has been largely hidden from the public for a long time, or just people have been so busy participating and enjoying the numbers going up that they were not necessarily aware of all of the strategy and all of the planning and all of this bot activity and sniping that's going on. So super interesting, man. Thanks so much for coming on to share with us today. I suspect sniping and some more stuff will emerge from the kind of the more broader stories to do with Kelsier and Millet and all of those things. So we'll continue to cover it as we think it is relevant, although we're obviously trying to focus on some more positive stuff as well, but we'll keep bringing you up to speed with it as we think it's necessary. But that's the end of our show for today, guys. Thanks so much for joining us. As always, thanks to Legendary for co-hosting. Thanks for Stats for jumping up with us. Picks as well. Funky 2 being up on stage with us. And thank you so much for joining us. We'll be back again with you tomorrow, live 7 a.m. Eastern time for 1 hour. X video, YouTube, Spotify, Apple Podcasts. Have a wonderful day. Take care, and we will see you tomorrow. Bye-bye.